NextEra Energy Stock, ticker symbol NEE. This stock is down 40% year to date, underperforming the overall market big time. There are a lot of things happening within this company, but also within the industry itself. And these two things are the main reason why the company is down. NAP, which is closely tied to NextEra Energy, has slashed its growth outlook. The other main reason is the rate pressure that comes with it. On the 25th of July, NextEra presented quarter results where they beat on EPS and revenue. For the upcoming earnings, analysts think they will miss the estimates, and also because of most recent events. People love NextEra Energy Stock because of multiple reasons, one of them being the dividend, and I understand why, with dividend yield at 3.72% and 27 years of dividend growth. So could this be the perfect moment to buy NEE Stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does NextEra Energy do? NextEra Energy distributes power to nearly 6 million customers' accounts in Florida and owns 32 gigawatts of generation. NextEra Energy resources the renewable energy segments, generates and sells power throughout the United States and Canada. With the stock presenting quarter results within 2 weeks, I won't do a full deep dive into the last earnings report, but just grab the main highlights. FPL net income increased roughly 195 million, and adjusted earnings for the energy resources increased 16%. To me, both numbers look very good. In here we see the results year over year, and to me this looks pretty good as well. We see some steady increases. In here we see that NextEra Energy was expecting a 6 to 8% annual growth rate for the coming years, and they expect to continue dividend growth of 10% per year. I'm very interested in these numbers in the next earnings report with roughly 2 weeks. And now that we know a little bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week, and also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. NextEra Energy is a 101 billion market cap company. PE ratio is at 12, which could indicate that they are undervalued right now. Later in this video I will show you my 3 price targets for NextEra Energy Stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at almost 27 billion, and in this graph we see that revenue went up in the long run, but it is not always steady and consistent. Over a longer period of time, margins are going up and down quite a bit. This is something to keep your eye on. But it has to be said that most recently it is increasing again. EPS is following the same pattern as the margins and revenue. Analysts expect high single-digit growth in EPS in the coming years, which is really nice. But I'm really interested to see the updated versions after the upcoming earnings report. And for the revenue it is a pretty similar story, but with slightly lower numbers. Again, let's see what the numbers will be after the upcoming earnings report. Return on assets is sitting at 0.2%, which is a low number. Return on equity looks very good, and the most important number, return on invested capital, is sitting at almost 5%, which is also a low number. But it is slightly higher versus the 5-year average, which is something that I like. Current ratio is at 0.5, which is looking pretty good. There's nothing really special to mention here, since it is really steady over a longer period of time. Right now, NextEra Energy has 72 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash position. NextEra has 1.5 billion in total cash, so they can't pay down a big chunk of their total debt. This is something that worries me a lot, especially since their debt is at an insane level compared to the cash position. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up and down quite a lot, and in the most recent years it was at a negative number. Again, this worries me a lot. Shares outstanding are increasing, which is something that I don't like. They're diluting the investor. And when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyway, dividend yield is sitting at 3.72%, which is a great number. Annual payout is at $1.87 and payout ratio is at 57%. I prefer 50% or lower, so right now they have 43% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at 11%, which is a great number. And they increased the dividend for 27 years in a row, which is very nice. And if you take a look at these numbers, the dividends paid since 2012, you see that NextEra Energy did increase the dividends at double-digit rate almost every year. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that over a longer period of time, payout ratio is kinda steady, hovering between 55 and 60%. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course, this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at similar growth numbers, which is very nice. Overall, these dividends look pretty good to me, but how about the historical returns? I decided to compare NextEra Energy Stock with the overall market, in this case the S&P 500. Next to that I added two similar companies, So and Duke. On the 5-year chart we see that NextEra Energy was beaten by the S&P 500. In total, NextEra returned 30% including dividends, versus the S&P 500 sitting at 62%. SO was the only company in this list to beat the S&P 500. On the 1-year chart it looks pretty different, with the S&P 500 having the highest return and all the others are seeing a low return. On the 6-month chart it is NEE Stock with the lowest return of minus 35%. And keep in mind this is including dividends. On the 1-month chart it is again NextEra Energy that has the lowest return, minus 23% in total. So bottom line, NextEra Energy Stock was beaten by the S&P 500 in the long run, and most recently it also doesn't look any good. So could this be the perfect time to buy NextEra Energy Stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with the revenue growth. For the revenue growth I'm filling in 2, 4 and 6% based on historical performance, their own outlook, but also because of the analysts. For the profit margin I'm filling in 20, 22 and 24%. And for the free cash flow margin I'm putting in 5, 6 and 7. For the PE ratio and the price to free cash flow I'm putting in 13, 14 and 15. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now NextEra Energy Stock is at $50. I hit analyze and we only see red numbers. And since free cash flow is at a negative number which gives a different outcome, I'm only focusing on the multiple earnings value right now. We have a low price target of $28, we have a mid price target of $36 and we have a high price target of $48. To me the mid price target is the most justified here, indicating that this stock is overvalued. My final conclusion on this stock is that I don't know exactly what to expect in the next earnings report. Not only current results but also in terms of the outlook. It is no secret that this company has taken a big hit and people expect another big hit after the earnings. For now I'm skipping this stock because of multiple reasons and you should be warned too. And if you decide to buy this stock, I wish you all the best and hope you will get some great returns. Within roughly 2 weeks they will announce their next earnings report and I will do a new analysis by them. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and that it brings some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.